Hey, good day. Welcome to another week, and we can expect another week of volatilities as the VIX is already up at 22. So this week we will have 20% of the S&P 500 company reporting out their Q3 earning results. And on top of that, Tuesday is the US presidential election day, very important, as either candidate win will certainly impact the market as they have different set of economic policy, which will have different impact on different industry and sector as well as company. Wednesday and Thursday will be the Federal Reserve's their November meeting, and Thursday afternoon they will be announcing whether there's going to be another round of rate cuts, 25 or 50 basis points. Certainly the market will react to all these events. And in terms of corporate earnings, and there are quite a few of mega cap company reported out last week, including 5 of the magnificent 7 company: Apple, Alphabet, Google, Amazon, Microsoft, Meta, 5 of them, and also Tesla the week before. And all of them, they're beating pretty much top and bottom line, except Tesla missed the top line, the revenue. And I think the reason is that their sales were down, EV sales overall, the EV market were down. However, they were able to meet the earning expectation. Elon Musk is pretty good at in terms of reducing operating costs. I think investors should also know that big chunks of their sales and revenue is actually coming from selling their carbon credit. As the overall EV market is down, other manufacturer or automobile and manufacturer, they have to offset their gasoline engine production with carbon credit. And when they're not producing or selling enough EV, they're buying those carbon credit from Tesla. So for many investors, especially value investor, I think we all follow Mr. Buffett. So let's take a look at Berkshire Hathaway's Q3 earning results. Their operating earning is at about $10.1 billion. It's down 6.2% from 12 months ago, primarily due to slightly lower revenue and higher costs. Their cash on hand has grown to $325 billion from about $275 billion the previous quarter. That's a lot of cash on hand compared to their total public equity portfolios, only at about $275 billion. So that's a lot of cash. I guess maybe Mr. Buffett is just haven't found any big opportunity that appealing to him, has good value and good growth, or at this scale, it's just investing $1 billion here, $10 billion there. It's just not going to move the needle for Berkshire, right? So that's why he's waiting. Maybe he's waiting for the perfect moment to swing his best for another home run, just like during COVID or the global financial crisis. In the past 9 months, Berkshire also bought back about $2.9 billion of its own share. So that's based on about $1 trillion of valuation. So it's returning about 0.3% of capital back to the shareholder. And the interesting observation is that this past quarter, he did not buy back any share. Based on the past valuation, I think Berkshire is being valued at about 1.7 times of its book value. And that's the 15 years average. And right now, at this price level, the Berkshire share is sitting at about 1.6 times, so it's fairly valued. So maybe that's why even Mr. Buffett is feeling that it's not the best way of utilizing capital. Well, another possibility is that this could also be a part of his succession plan. He made it very clear back in May in a shareholder meeting that Greg Abel is going to be his successor. So I think he's preparing the company with a lot of cash. That means flexibility, liquidity, so that the next generation of management, including Abel, has more flexibility, more optionality in terms of whichever direction that they want to take the company to. So those are all possibilities. And certainly the market as a whole is fairly valued right now. He made no secrets about that. So I think we can always learn something from Mr. Buffett by following him and by also having a little bit skin in the game at Berkshire share, and then we can follow, what he's doing. So I think that's it for this week, and we'll get on with our week, learn some more, and see what this week has to bring to us, to the market, and to all the investors. All right, cheers.